Yeah. We good? Up? Good? We good? Oh, yeah, we're good. Okay. Yeah, so hey everybody, my name is Darius. I'm a partner at Maven, and it's amazing to see so many of you here, so many friends and colleagues. And short question: who's first time in Amsterdam? Raise your hands. Oh, we have some, and who already spent last weekend in Amsterdam? Oh, okay, not that many. So, okay, you'll see that Amsterdam could be like a wild city, right? And together with crypto conference, I think it's going to be an amazing week for all of us. And I wish you have a fresh start of the week. So I think a couple of years ago, not that many people, besides some industry insiders and devoted builders, have expected that DeFi as an acronym going to be mentioned in like every single media outlet globally, right? We all going to be suddenly, becoming farmers, devoted farmers, working multiple DAOs and so on and so far, right? But here we are, so I think we should all give a big round of applause to all the believers, investors, and most importantly, the founders and builders that are making DeFi a reality. So, yeah. I remember I think it was 2 years ago, together with Balder, we were working on a deck to investors, right? And we were updating the TVL of DeFi, and every week we've been adding, $100 million, $200 million, slowly creeping to $1 billion, $2 and $3 billion. And right now we have 75, more than 75, I think, billions logged in DeFi, which I think it is an amazing achievement, but yet as an industry, we're still very young, and DeFi especially is still very young. There's a lot of stuff to build. And at Maven, I think we're trying to seek for those founders and work with partners that believe in the future of decentralized finance, right? A finance that's going to be frictionless and censorship resistant. So I'm sure that the speakers we got today are going to bring everyone up to speed and going to shed some light on the future and where the DeFi is going. So with no further ado, I want to invite the first panelists, right? They're going to talk about liquidity and on-chain liquidity from the market maker perspective. So, yeah, thank you all. Yep.
I think this is how we're supposed to start.
I think so.
Perfect.
Weren't you supposed to be in the middle? No.
It's fine.
All right, welcome everybody. You guys comfortable?
Very.
Excellent.
There we go.
Yeah, so first of all, a big welcome to everybody here from us here at Maven 11. My name is Victor van Eyck. I work for our liquidity pools on Maple Finance, which is a very cool DeFi protocol that I hope you all have heard of by now. So in that capacity, we finance a lot of the top crypto institutions, like we have some of them here on the couch, and therefore it's a very great day today to talk about some of the issues that market makers face, and let's focus a little bit more on the DeFi side of things versus AMMs and market makers versus an order book. So with that in mind, I'd like to welcome our panelists here. We have Arpan from Dexterity, Michael from Flow Traders, and Juan from Keyrock. So I'll let them briefly introduce themselves, and then we'll jump right in it.
Perfect. Thanks for having us, Victor and Maven. Really appreciate it. I'm Arpan from Dexterity. I'm pretty boring, so I won't talk too much about myself, but I'll introduce Dexterity for you guys. Dexterity has two sides. The primary side is essentially a prop trading business. We're probably one of the largest crypto funds in the world. We moved about $1.25 trillion last year. And that's all prop, which is why we don't really do a lot of external marketing. Recently, we've started to say, hey, listen, we do this really well. How do we help other people other than ourselves? And that's when I co-founded our market making team. So we're working with a handful of top projects right now. We literally just launched a couple of weeks ago. And we're really, really excited to jump into this new journey, or this new part of our journey, in helping new DeFi protocols and frankly any other crypto protocols succeed and thrive in the very early stage of their evolution. Thanks for having us again.
Excellent. Michael?
Thanks. My name is Michael Lee. I'm responsible for the digital asset trading business at Flow Traders. Flow Traders is a proprietary trading firm specializing in providing liquidity across global financial markets. For crypto specifically, we started in 2017. Our goal is there to support the growth of the industry through providing liquidity, but also to help support new projects, leveraging our expertise and also investing through them.
Perfect.
Yeah, so hello everybody. My name is Juan David, so I'm one of the co-founders of Keyrock. So we're also a market maker, as you can guess. Trading exclusively in cryptocurrency. Started the company around 2017, and all in all, we are very more service-based company, which also evolved to do proprietary trading, but we started from the other side. Today, we serve and market around 100 different assets and protocols in the industry that we support across 85 different exchanges. And recently, doing a lot of experimentation in DeFi, so that's why I'm here, to see what learnings we can share about all the evolution that is happening in that sector of liquidity.
Yeah, perfect. So maybe touch upon your point about supporting protocols. Can you maybe elaborate a bit more, and it goes for all three of you, how a market maker supports the growth of this industry and what role you play in that?
Yeah, indeed. I mean, I think that it's interesting to look at what's happening in terms of like who you provide liquidity. Right? When we started the company, majority of it had to be very simply building a market around a centralized order book exchange. As it has evolved, it started to become more complex, of course, because we started to have different type of exchanges, multiple listings, also OTC requirements from investors that participate in protocols, and now recently different spectrum of liquidity in the decentralized space where you would want to build liquidity in a Uniswap v2-like liquidity provision market, Uniswap v3 market, as well as an order book. And all of them, they have different types of target customers that the different protocols want to attract to interact with their ecosystem. And as such, we need to figure out a way to support them across the board to be able to build liquidity in all the different type of environments that they would require it. And there are different challenges in each of them, but overall, the core concept is how to build systems that have a unified understanding of the world and can absorb data in a way that you can provide the right decisions in the market, regardless of if it's an order book or it's not. And that's ultimately the type of technology that our market maker will be building to support these type of companies.
Yeah.
And to add to that, like I think a market maker not only provides liquidity on exchanges, they often involved in borrow and lending activities. They often have an OTC desk. So that makes us a natural user for many of these DeFi protocols. And that's where we can also add a lot of value.
Yeah, and how, in what stage would you say that your organization is now deploying those strategies, and how will you see that evolve into the future?
At the moment, it's still very experimental. As a regulated firm, we run into quite some challenges. But yeah, our ambition is within the next years to gradually expand our involvement there.
With you, Abran, how is that with Dexterity?
Yeah, so I would say that I think that everyone, so as a market maker, we try to work with really early stage projects, but we do so in different ways. And I think we're certainly trying to do is broaden how we work with projects. So we, obviously, liquidity provision, capital markets expertise, that's sort of our bread and butter. But often we find projects coming to us asking for a lot more help and support on things like tokenomics, governance design, exchange strategy, and things like that. Because a lot of early stage projects just don't have that in-house sort of knowledge, right? And so we find ourselves diving more and more into sort of that role, and we're very happy to help, right? Because for us, we like to think that all of our incentives must 100% be aligned, that if the project succeeds, we succeed. If frankly the projects fail, we fail, and our economics need to be aligned on that. So we've seen ourselves move from sort of purely providing, I think, just liquidity on be it centralized, decentralized, et cetera, exchanges, to being much more of a holistic strategic partner. And I think that's the way that we have to move in the long term to make sure that we're always aligned with the projects that we're working with.
Yeah, got it. And yeah, maybe not a popular topic, but on how does the KYC angle fits into working with protocols for firms like yours? I think Michael Flow Trader being a regulated company, maybe a different point there, but is it how do you face that internally versus your activities in DeFi?
Yeah, it's quite a big challenge for us. One of the main blockers, sort of, to move fully into DeFi. When we're trading OTC spot on cryptos, for instance, we always need to know who we're trading with. On exchanges, it's less so because the exchanges will do the KYC AML basically for us. But when we start interacting with DeFi protocols, we don't know who's behind that. So currently tools are being developed to be able to better understand where flows are coming from. So that gives us a lot of comfort in interacting with these protocols. I think another development that I see is purely on the AML side. Like I've had to send my passports for I don't know how many times, but more than 20 times, I think. And being able to improve that process, to have maybe one protocol that would do the KYC for you, and that can be reused for other protocols. I think that would be eventually a good way to move forward. But yeah, it's in progress, but there are good developments there.
I will say, though, this is an area which obviously isn't fully fledged and fully formed yet, but we are currently seeing and are able to play an active role in how this evolves. So the way that we're adopting it right now is all the jurisdictions that we actually are active in. We are working with regulatory counsel, we're working with regulatory experts, and frankly, the regulatory bodies themselves to try to understand what is actually the best way, what is the safest way to actually get AML, KYC, all those kinds of checks done without necessarily compromising our business model and frankly, the ecosystem's growth potential.
Yeah. And for you, Juan, with the project, do you work for any founders, DAOs, or?
We have to, like, of course, follow KYC, correct? I mean, I think that when it comes down to, we were discussing it just before, we're still at a point in time where the gross amount of the revenue of market-making company comes from centralized exchanges, and that's why I think that all the KYC aspect regarding decentralized venues is still something that is important, but it has a low risk compared to the size of the business. We see it that way, so we try to do as much as we can, but it also needs to be relative to where the business is going. We do see that, and we're not very worried about it, because what we see is that the protocols themselves see an added value on taking care of it themselves. I mean, you yourself at Maple, correct? Like a protocol that has implemented a more enterprise version of interacting with protocol, Aave v3. And our point of view is that as long as we follow regulation, we believe the protocols would generate just their enterprise versions to access that encompass that, either from the protocol perspective or even from the blockchain perspective, where blockchains will have side chains or chains that have versions where the wallets are KYC first ready, and then in that way the burden of the KYC can be taken on a more kind of like layer base instead of a per company base, which would make more sense, be more efficient in the long term anyway.
Yeah, got it. So maybe talking a little bit about your the businesses that your firms run, like, and how does that has its place in a world that, you know, the industry is getting decentralized, obviously, but also more automated with AMMs coming up, and how, as a more traditional market maker, if I can use that term, how do you add value from that perspective when you guys are obviously when you started trading, I'm sure it was all order book driven and still probably is for the most part. So how does that how do you look at that?
I think it's an interesting question. I think that I talked about it a little bit in one of my previous answers, where we talk about a more holistic service offering than just pure liquidity provision and market making. But I think what we also have to remember is that I think people in this room and sort of people who are in conferences like this probably understand DeFi, AMMs, be it Uni V2, V3 type pools a lot better than your average crypto user. And I think stepping back, we just do have to remind ourselves that the volumes that are going through AMMs right now pale in comparison to what's being done on CeFi, and centralized exchanges in particular. So while DEXs and AMMs are a great way to start to ramp up your early liquidity, and frankly can be very cheap and easy ways to get that proof of concept and that traction that you need, right now, if you want to be a massive protocol, if you want to have a fully diluted value in the billions, you need CeFi more often than not. Sorry, that's not to say there aren't exceptions to this rule, but in general, that's how you get there. So there's certainly a way that we help that transition. And I think as we grow, there's other elements in that early DEX space, in that early AMM space, that we are finding that, again, projects need help with. Be it sort of defining exactly what those economics look like, be it being sort of Genesis LPs, just basically providing capital, be it providing things like just-in-time liquidity on UniV3 pools. There's different elements that a project shouldn't need to be an expert on in order to find that liquidity and succeed. And I think that's where this industry is growing and moving towards.
Anything you want to add there?
Yeah, I think the automated market maker, as it's built, it's very innovative, but there are also drawbacks to that. It's not the most efficient way to provide liquidity. Hence why, for instance, Univrap V3 built these extra futures. So I think it's adding to how liquidity is provided, but I still think like it still requires market makers like ourselves to be able to provide this liquidity.
Juan, any views from Keyrock
Yeah, I
on
mean,
that?
look, I think this is a very big topic. Yeah, like what is the role of a market maker in a world where there is automated ways of building liquidity? The reality of it is that the creation of the AMMs was a great innovation, like Michael was saying. Like it's something that really put a stand on how can we build liquidity. But when you look at it closely and you really try to understand what is innovation, the innovation is twofold. It is innovation in how capital gets put into liquidity, correct? Enabling not only a market maker, but anybody to put capital. I think that's not going to go anywhere. And the second part is having a function-like model instead of a discrete price. When you look at what a market-making algorithm does, it's not very different actually than an AMM in the sense that it is indeed an automated model. It's an automated model that is presenting prices. Behind those prices, there is a function. There are characteristics that are molded by a team of quants, which ultimately you could represent in exactly the same way that you would represent a UniV2 function. It's just that it would be more complex. Taking that into consideration, it tells me that there is no doubt in my mind that majority of the liquidity would at some point be inside systems that are much closer to the automated market makers. The reason for that is that the automated market makers today are very basic, yeah, but that doesn't mean that they're not going to get better. Like it's most probably one of the most exciting mathematical problems that the industry has at the moment. Like everybody that is a mathematician that is in this industry is basically working on fixing this and coming up with models to make it better. We've personally evaluated to potentially invested or potentially invest in different projects that are trying to solve that particular problem. How to build an automated model that has lower impermanent loss and can scale with higher capital efficiency and more liquidity in the market. UniV3 was already a step in the right direction. But again, when you look at what we do as market makers, one singular market is never the whole picture because you can never forget the rest of the market because the whole market is a cohesive system that is correlated and that works in tandem. So regardless if these automated models come, they only replace a very small part of what a market maker does. They only replace the capacity to acquire and scale capital by enabling other people to put money on it. And it replaces the shape of the function. Yeah? But the reality is that you still need a system that is capable to connect to all the systems and understand where to allocate capital, when to allocate capital, and it basically comes back again to the same. So it's just that the way that we would in the future pose that liquidity would not be a discrete order, but it would be a function. You say we want to provide function X. You can also decide to do that for 5 minutes or for 10 days. And that's actually what, I mean, I'm very excited about it, and I think that sooner or later we'll get to a point where even AMMs will become too sophisticated for just any person to put money in them, because there will be more sophisticated ways of managing them, actually.
Yeah, no, it's 100%. These will coexist, and some probably merge into one big system. I think a difference from AMMs is that you guys have maybe a bit of a clearer picture of flows and what's happening in the markets. So with that, obviously the phrase institutions are coming is being coined here and there. But what can you tell from what you see in the markets, or did you get approached perhaps by more traditional financial players on how to navigate these markets? Any anecdotal evidence that there is more activity from that side?
Yes, so we're seeing a lot of requests from institutions on getting exposure to crypto, and currently regulations are kind of blocking them to hold any spot crypto on their book. So what we are seeing within banks, for instance, that NDFs are becoming more popular as an instrument to gain exposure to crypto for clients of banks. And I expect this will continue. They will become more popular in the more traditional world until regulation allows also those kind of institutions to get into crypto itself.
Yeah, we're definitely having a lot of conversations with, again, it's not necessarily, again, I don't know if, it's not necessarily, I think, us as Dexterity who's going to be sort of the vanguard or the tip of the spear in terms of getting institutions involved in crypto. But there's lots of other institutions out there who are crypto native, or at least sort of much earlier on that adoption curve, who are looking to partner with those mainstream institutions to help them jump into crypto with potentially someone like our help. And again, you saw this kind of all through 2021, right? That, I mean, to your point that anecdotally, how do we see institutions coming into crypto? Throughout 2021, you saw that as you had, like, for example, proxy BTC price movements, the crashes subsequently just, the floors kept getting higher and higher, right? And that's because a lot of these mainstream institutions, they have a 6, 9, 12-month cycle in which they actually can start to deploy more and more of their sort of AUM into crypto. And again, caveat is they're still deploying, even sort of the most advanced mainstream institution is still deploying a fraction of percents of their total AUM into crypto right now. But even that requires sort of that threshold. And once they actually start deploying, it's not as easy for them to undeploy, which is how you see that floor constantly rise. So I think we're at a super interesting time now, because as regulation gets more firmed up, you're going to start seeing more and more institutions being able to deploy more into crypto. That floor will keep getting higher, and then they'll keep looking for different routes in, which is, I think, what's really exciting for us.
Yeah, it definitely feels that it's sort of picking up on all fronts. So I'm just thinking a bit of a course about time, but maybe to wrap up with any interesting protocols that you've seen come by that you think can take DeFi to the next level, and that would be very useful protocols for you to be active on.
Well, maybe I can start then. I mean, I think that talking about a specific protocol is not as important as let's say a concept that is being adopted by multiple protocols, especially because every time there's a successful concept, it gets spread out across multiple protocols in all the different chains. But I think, from a point of view of liquidity, definitely everything that are building blocks on top of Uniswap v3 is something that we look at and that is very interesting, which are basically systems that enable the automation of the management of liquidity with different type of setups that kind of like you could use if then do that on the positioning of your liquidity on Uniswap. It is super interesting. I think there is definitely growth in that direction as well. I personally like a lot everything related to leverage liquidity. So the combination of money markets with liquidity provision at scale. I think that's definitely a game changer, because you can start looking at liquidity and combine that with hedge positions in a very simplistic way, will basically enabling you to trade correlated assets on leverage. And when I look at it, and one of the things that got me very excited about this is like I was looking at if you look at very simple liquidity pool, let's say ETH BTC, and then you look at that pool in the eyes of a leverage position. That pool is paying you for taking leverage. So it's basically kind of like switching around the perspective that when you take leverage, you pay for leverage. And therefore, leverage is a very short-term instrument because by definition, if you go to any perp market, you end up and you carry a position for a very long time, you end up basically just accruing cost. While with these instruments, you could potentially replicate a similar model where you can have high leverage, but you actually get paid for holding, which is interesting. And I'm very excited about that, actually.
Yeah, yields in DeFi in general have decreased quite a lot if you compare it with 6-12 months ago. So what we see a few projects be working on is improving the capital efficiency. While on a Uniswap or Aave, you just have to post collateral there, capital, and it can grow to whatever. But given the yields are lower, it's not that interesting anymore to deploy large amount of capital. So what these projects are looking for is more on a RFQ basis to start trading in a certain pair, or even when you have borrowing interest, to post that interest so that the market makers can react to that. So I think that will become quite an important way to make the markets more efficient, to lower the borrowing rates, and to maintain some of the yields that are currently out there. Because as the market becomes bigger and more participants are able to join, I'd expect the yields to slowly decrease.
Yeah. If we can postpone that, that would be, I think, a very welcome development for all of us here. We like higher yields, of course. Arpan, anything?
Yeah, I think that for me, what's been really interesting, and I guess for us as a firm, what's been really interesting is seeing how cross-chain is really growing, right? As we've seen over the last sort of year, 18 months or so, we've had multiple chains come up, and these chains aren't necessarily just competing with each other on sort of a pure efficiency basis. There's lots of different now axes of competition, which makes it more and more likely that it's not going to be a winner-take-all market. There's going to be fragmentation, and therefore cross-chain infrastructure like bridging, wallets, et cetera, I think are going to be really important. And that's one of the places that we're certainly spending a lot of time on and focus on to help develop that new layer of cross-chain bridging, be it technology, infrastructure, et cetera, to allow for a world that actually doesn't become kind of siloed, and you're able to easily access all of it as sort of as simply as possible.
Excellent. Any last comments? Something you're excited about for the next 12 months, or a big prediction? TVL, where is that next year?
Any protocol that you're looking at? But you guys at Maven, you invest in a lot of amazing stuff, correct? What's coming? Come on, guys.
Yeah, we're not going to lift we're not going to open the kimono completely here. So that's for drinks tonight, right? We can discuss.
Okay.
So guys, listen, thank you very much.
That promise, huh?
Sorry.
Be careful. I'm going to hold you to that promise.
No, thank you very much, guys. I think you guys play a critical role with your respective firms in helping efficient markets, growing the industry. So on behalf of Maven 11 Framework, Juan, Michael, Arpan, thank you so much, and I'd love to see you back the next year. And guys, if you have any questions, I'm sure during drinks or over coffee you can talk to these guys. And thanks again. It was very informative.
Thank you.
Thank you.